Hi everyone, and welcome to another episode of Making Sense with the Matteo Group Financial Services. My name is Dave Adelino, and I'm here to tell you guys about some of the new tax credits featured in Secure Act 2.0. As many of you may or may not be aware, Secure Act 2.0 was passed at the end of 2022. It built on many of the existing provisions that were found in the original Secure Act that was signed into law at the end of 2019. The original tax credits provided in the original Secure Act were tax credits for starting a plan, as well as tax credits for adding automatic enrollment to a new or existing plan. The tax credits for automatic enrollment remained unchanged in Secure 2.0. The tax credits are $500 per year for 3 consecutive years. So no change there. However, in Secure Act 2.0, it is now mandatory beginning in 2025 for retirement plans to feature automatic enrollment. Now, the exceptions to this automatic enrollment requirement are businesses with 10 or fewer employees, businesses that have been started in the last 3 years, or church or governmental plans. Everyone else at the beginning of 2025 that does not fall into these exceptions will be required to offer automatic enrollment in their plan. The tax credits for starting a plan, however, have changed with Secure Act 2.0. Previously, the tax credits for starting a plan would cover up to 50% of the plan startup costs and can be used for 3 consecutive years. In Secure Act 2.0, this tax credit was boosted to cover the plan startup costs up to 100%, and again can be used for 3 consecutive years. Now, the one thing that remained unchanged with both of the plan startup credits is the maximum allowable for the startup cost is $5,000. So the prior Secure Act had that allowable limit of $5,000, and Secure Act 2.0, which will cover up to 100%, also has that $5,000 limit for a maximum. The new tax credits that are featured in Secure Act 2.0 are tax credits to incentivize employers to include a company contribution. The tax credits can be used for small businesses with 50 or fewer employees and can be applied towards any employees that make less than $100,000 per year. Now, the tax credit, again, has a maximum like the startup credit, where it is to a maximum of $1,000 per employee. So each employee that is receiving a company contribution, as long as they're making less than $100,000, the employer will be able to receive a tax credit of up to $1,000 or 100% of the employer match, whichever is the lesser of those two amounts. These tax credits will be used at the rate of 100% for the first 2 years, but then will be gradually phased down by 25% the remaining 3 years. In year 3, it will decrease to 75%. In year 4, it will decrease to 50%. And in year 5, it will decrease to 25%. Beyond that, the tax credit has been fully phased out. So no tax credit in year 6 towards the employer match. With all new and existing tax credits featured in Secure 2.0, and the rise of more and more states offering state-mandated retirement programs, there has never been a better time to look at starting a retirement plan for your business. Please feel free to get in contact with us or reach out to your existing financial professional or accountant, as they should be able to provide some additional guidance as well. Thanks.